Hello, I'm Michelle Martinez Reyes, Partner and Chief Marketing Officer at Latin Business Today. As small businesses continue to face the challenges of the COVID-19 health crisis, Latin Biz Today and Popular Bank have partnered up to bring you Driving Success Through the Pandemic, a 9-part discussion series to discuss some of the most pressing issues facing small business owners today. Popular Bank's Chief Operating Officer Manuel Chinea and Latin Biz Today's Corporate and Advisory Board member Eli Mendoza recently sat down to discuss some of the immediate challenges and opportunities small businesses are navigating. In this first stage, we'll cover ensuring liquidity and an unstable economic landscape, seeking and procuring emergency funding in the face of revenue losses and heightened expenses, navigating the Small Business Administration PPP loan forgiveness program. In this second session, we'll address seeking and procuring emergency funding in the face of revenue losses and heightened expenses.
And being the banker in the group here, I'd like to kick us off, and then Eli, please jump in. I'd first like to start by talking a little bit about recapping the success of the PPP, the Payroll Protection Program. Millions of small businesses benefited from this program. One of the advantages of this program is that if you, as a business, have the opportunity to apply and get approved and get a PPP loan, you have the opportunity to get that loan forgiven. So truly, instead of being a traditional loan, can turn into capital for the business, because again, the idea here is that if you can demonstrate that you maintain the employees in your business, there's a whole formula behind it, but there is a strong likelihood that you can get all or most of your loan forgiven, and in a way becomes capital or a grant for your business. Now, there is talk about the possibility of a fourth round of PPP loans. That is still being debated. Obviously, is subject to the Congress and the White House reaching an agreement on the next federal stimulus package. There's a lot of controversy there. They seem not to be able to come to an agreement or a compromise. The one good thing about PPP is that this is one of the few elements that has bipartisanship. So the odds are that there could be something once they finally reach an agreement on the next federal stimulus package. But there are other sources that are available right now, and one that I want to bring to the attention of our small businesses is the Main Street Lending Program. This was a program that was approved at the same time that PPP was approved. Obviously, PPP, because it has the opportunity to become a grant, grabbed all the headlines, and everybody wanted to just secure their PPP loan, because obviously that could eventually turn into capital. The Main Street Lending Program is not going to be a grant. It's going to be a loan. So you have to repay whatever you get in Main Street Lending Program. However, there are some very clear advantages to the Main Street Lending Program. The terms under this program are very favorable. Just to give you an idea, and obviously my advice is that you go to your financial institution and talk to them about this program. If you have the need from a liquidity perspective, this would be a great opportunity for you. These are 5-year loans. In the first year, you don't have to repay interest or principal. So that means that you get the money and you don't have to make loan payments in the first full year. So talking about securing and boosting your liquidity, that's great, because normally you take out a loan and 30 days after that, you need to start repaying the loan. In this particular case, you don't have to do that. And even when you get 2, 3, and 4, you're paying a very small amount. And then in year 5 is where you have more of a bullet payment. But obviously in 5 years, odds are that you would have overcome any difficulties that through this pandemic. And the critical thing is the advantage of having no payments whatsoever in the next 12 months after you take out the loan, and then much smaller payments in the years after that, which again should be more than ample time for you to overcome the difficulties of the pandemic. It also has the opportunity that if you have a loan at unfavorable terms, you can refinance that loan. Now, there is a catch there that is more critical to the banks than to the individuals. The program doesn't allow a bank to refinance a loan that the customer has with the bank. But if the bank can can refinance a loan that the customer has with another bank if the terms of the Main Street program are more favorable. So again, a lot more details surrounding this program, but the good news is the program, after a delayed start, there was a lot of confusion, a lot of back and forth. Everything has been clarified. Banks are taking Main Street lending applications, and it's something that, again, whether you took advantage of PPP or not, you still qualify for a Main Street lending program. So I think it's something that, given that the pandemic, we don't suspect is going to obviously work itself out in the next 3-6 months. And if you need more assistance on the liquidity front, a Main Street lending program might be a great vehicle for you and something worth looking into. And at least, and obviously you can go talk to a bank about a traditional loan, but obviously the Main Street lending program is going to afford you probably more favorable terms that you can get normally with a traditional loan, because this one has a government guarantee that allows the bank and the program define exactly the terms and the pricing is very favorable. But I encourage small businesses to talk to their financial institution and inquire more about this program.
Hey, Manuel, how do businesses think about qualifications? Is there a size qualification, or is there, are there things that they should be wary about or focused on when coming for the program?
Yes, the program has a limitation of the business cannot have more than 15,000 employees. Initially, it used to, at the very beginning, had a minimum number of employees that they fortunately removed, because initially I think the requirement was that this was designed for bigger businesses and it required that you had to have at least 500 employees. They finally removed that, which I think it makes a lot of sense. So right now, it's basically the size of the business, and there's also a limitation in revenue. The business cannot make more than $5 million in revenue, but that's $5 million. So it just provides a lot of room for businesses, from small business all the way to large middle market company, to apply for this program. I do want to warn individuals, and this is part of the information that the banks would share, there are restrictions in terms of distributions, in terms of what you can do, in terms of dividends and payments. It doesn't come without strings. Obviously, the government wants to make sure that if you're seeking this assistance, you're not going to turn around and all of a sudden distribute this assistance out to your principal with the program. But again, I think for some businesses, if they really have that need and it's a really pressing need as far as liquidity is concerned, having those strings attached is a small price to pay.
Well, no, I was just going to mention, I mean, we talked in the previous segment about liquidity and about the things that you could do to manage cash better. And certainly the way that the payment terms are structured here, right, is another source of savings, right? At the same time that you're able to make sure that you've got enough cash cushion, you are in a position where, I mean, you worry long term, right? Obviously that you are keeping your business going and will ultimately pay back the loan. But in the short term, where there's so much uncertainty, right, there is such a big impact on businesses right now. And businesses are trying to manage keeping activities and keeping the brand and their activities in the communities going. This is a perfect way almost to secure that capital and to get a little bit of a pass for a couple of years on paying things back, so long as you intend to stay in the business, right? Which I think the series and what we're really talking about.
And one thing I forgot to mention is that initially they were not eligible, and they also changed that. Not-for-profit organizations are eligible for the Main Street Lending Program. So I think that at the end of the day, they're not-for-profit, but they're still an enterprise, right? They're still a business. And a lot of not-for-profits are suffering because, unfortunately, in moments of crisis, as people are shoring up liquidity in their own situation, many times one of the first places they do is they cut back. They cut back donations and grants to not-for-profits. So a lot of not-for-profits have seen their revenues, their fundraising drop dramatically, and that normally tends to be one of their main sources of revenue. So again, as the economy improves, as we overcome the crisis, I think that these not-for-profits can get back on their feet, but there's a gap there, and they live in, for lack of a better term, paycheck to paycheck. I mean, they live fundraising cycle to fundraising cycle, and if they cannot secure some additional liquidity for the next 12 months, or a little longer, they might unfortunately not be around for when the economy recovers. So this is a great way also for some of these not-for-profits to be able to ride this out and be around after the pandemic is over.
Thank you for joining us. Stay tuned for our third session covering navigating the Small Business Administration PPP loan forgiveness program. We look forward to sharing some of the most important discussions soon.